Module 10, Chapter 5, Financial Administration for Special Events. Learning Outcomes, Chapter 5. You'll be able to understand basic event leadership, financial and accounting terminology. You'll be able to maintain financial records, to understand and interpret the event balance sheet and the income statement, to calculate the break-even point and the profit margin. You'll be able to forecast projected revenues and expenses, to estimate reliable budget goals, to identify sustainable funding, to manage an event during turbulent economic times, and plan and allocate your budget. Those are lofty goals, but this is a very important chapter. Budgeting. Budgeting is a critical step as the budget drives the event. I'll repeat that. The budget drives the event. Your budget is your financial action plan. The estimates are based on assumptions. These are your best guesses, your estimates based on assumptions. Budgeting includes income and expenses, marketing, the event history, the general economy, forecasts, profit projections, income expense or return on investment, financing. These are all included in the income and expense portion of budgeting. Types of events, whether they be profit-oriented or break-even or even loss leaders or hosted events. Loss leaders means that they're not intended to make any money, that they're just going to be expenses and no revenue producing, no fees for registration or fees for hosted events. So those are the different types of events. More about budgeting. You need to take into account the special event's financial history. Look at least a 3-year period if you can. The more history, the more accurate your projections will be. Consider the high, the low, the best, and the worst. Look at the general macro economy, what's going on in the world. Is there a recession? Is it good times? There's growth projected. What's happening out there? What's your reasonable projected income? There's a Greek word logos or logic that means to act reasonably. So make logical assumptions based on the information at hand. Sustainable funding. The more income streams you have, the more stability you have for your event. Public or corporate sponsors, philanthropy, earned income, for example, ticket sales, merchandise, food and beverage sales. So the more of these streams that you have, the more diverse the income streams are and the more sustainable your funding stream is. Budgeting continued. Typical income categories would include advertising revenues, exhibit or exhibition booth rentals, vendor commissions, donations, gifts in kind, sponsorship fees, grants and contracts, interest income from investments, concession and merchandise sales, event tickets, registration fees, and more. Those are typical income categories. Don't forget the income when you're doing your budget. Expenses are what most people think of in budgeting. Expenses include accounting, advertising, audiovisual, auto, awards, decor, entertainment, evaluations, food and beverages, gratuities, guest transportation, insurance, legal, permits, postage, research, signs, site rental, taxes, volunteer recognition, and as many things that are appropriate to your particular event. Structuring accounting codes. All income and expenses are assigned a specific code by category. This is what accounting does. Finding and supervising an accountant. This depends on if you're in-house or you have a contracted service or if you're doing it yourself. So you need to know who's in charge of the accounting. There's lots of accounting software out there. Small business software like Quicken or even Excel spreadsheets might do in a very simple, straightforward event. More sophisticated, usually more detailed, and along with that, it's usually more expensive. Your special event or your planned event may produce a profit. The profit is the revenue minus the expenses. Profit is also called retained earnings. Fixed overhead does not depend on the number of participants. This is an expense or overhead that would be there whether you had 1 or 1,000 participants. It's predictable, regular expenses, for example, rent, salaries, insurance, telephone, or other operating expenses to support the business are fixed, part of the fixed section. Also, the event expense that doesn't change with the attendance, like, for example, music. You'd have the same costs associated with the music for 1 or 1,000. To lower your cost of operations, lower your overhead. Variable expenses, on the other hand, do vary with attendance, and they're more difficult to predict. A simple and straightforward example of a variable expense would be food and beverages. Your food and beverage costs would be much less if you had one attendee versus 1,000. But most expenses associated with the consumable part of the event will be variable. So keep in mind the difference between fixed overhead, variable expenses, and what profit is. Producing profit continued. Net profit versus gross profit. The percentage of fixed overhead expense dedicated to producing the event. So how much of the fixed overhead is dedicated to producing the event? That's the difference between the net and the gross profit. Your break-even point, you'll want to know what that is. Look at the analysis on page 167 in your textbook. Know what a contribution margin is. That's the difference between the revenue received from a single person and the variable cost incurred for that one person. There's more than one way to explain contribution margins, so read about that and understand what that term means. The break-even point is the total fixed cost over the contribution margin. So the break-even point would be where your revenues and your expenses are equal. Cutting costs. Cutting costs without sacrificing integrity will help you ensure profits, so that will increase your profit if you keep your costs low. Keep your overhead as low as possible, trim unnecessary expenses, save where you can. The lower your expense, the greater your cash flow will be. Ensuring positive event cash flow. Insolvency is inadequate cash flow. You do not have enough cash flow to meet your expenses. Your cash flow is your liquidity. Payables are what you owe. They're the invoices, and they're expenses. Negotiate the most favorable payment terms that you can with your vendors, because that'll be money in your pocket. Your receivables are what is owed to you, and that's your income, so collect your fees as soon as you can. Good management equals collect your revenue as soon as possible, pay your bills the last day that you can, allowed by the contract. So this is all good advice for running a general business, not just special events. Accounts payable, finding the best terms. Establish good working relationships with your vendors. Off-season may provide more favorable terms. Typical accounts payable customs, some require deposits. Some terms would be something like 310 net 30. That means that you would get a 3% discount if you pay off the balance in 10 days. Otherwise, the entire amount is due in 30 days. Your vendors may extend credit and give you a longer period, such as 60 to 90 days. But you want to negotiate your accounts payable and control your purchases. So these are all terms that you'll need to be familiar with. These are, in this particular slide, are accounts payable terms. Something to consider is bartering. Trading services with a supplier for something else. Could you trade? Could you exchange services with a supplier? Provide something that they do for something that you do? It could be mutually beneficial, but there are tax implications. So it's a creative way to look at going about planning your special event, if it's possible. Common event financial challenges and solutions. Look at event planning as a business. The same problems all businesses have, event planning has also. So you need to consider employee salaries and benefits, proper compensation for your salespeople. Clients may be slow to pay. You may have cash problems in event planning. And terminated employees may attempt to compete unless you have a non-compete clause in your employment. Foreign exchange rates. This is a consideration if you have an international business. If your special events business is international, you need to take into account global market conditions, government policies, local customs, and legal considerations. This may not be something that you personally have to deal with, but you should be aware of that. Look at page 176 for a typical event budget example. Here's a quote by professional event coordinator, the icon Ruth Silvers, who's written several books in the industry. And she's talking about considering the expense of the person to attend your special event, and in this case it's probably a conference. You need to achieve a positive return on the attendee's investment, so that if they're expending a certain amount, they need to take back with them ideas or a way to have the value of what they can return with exceed what their costs were. So it's a whole cost benefit calculation.